Today is Wednesday, July 24th. We are now live with the latest in the crypto world. It's 9:30 a.m. in New York City, 2:30 p.m. in London, 10:30 p.m. in Tokyo, and 3:30 p.m. here in Malta. Jason Fernandez and John Walsh are joining us on today's show. But first, we will take a quick look at some of the crypto market indicators. The cryptocurrency index, CCI 30, has declined further south of the 4,000-point mark. The index is down by 20% so far in July, but it stands 70% in the green year to date. The 30-day Bitcoin volatility index was virtually unchanged yesterday. It has stayed close to the 7% level for the past 7 days. The CoinMarketCap website's daily traded volume indicator has remained south of the $60 billion mark during most of the past 24 hours. The Missouri Real 10 volume measures slightly more than $2.2 billion. The Bitcoin dominance indicator has declined below the 65% mark as the crypto king trades at less than $10,000. The top 5 digital assets are all trading in the red today. The price of Bitcoin is once again in the 4-digit territory. Ether is testing the $200 support level. XRP declined to trade at just over 30 cents. The $90 support line failed to hold for Litecoin, but the asset has reclaimed this ground. And finally, Bitcoin Cash is down by nearly 4% to trade at less than $300. The Coin 360 heat map shows a generally bearish picture today, as most of the assets are trading in the red. According to the token spread website, there is an arbitrage of more than 2% for the Bitcoin dollar pair, and it is between the BitMEX and the XMO exchanges. The biggest Bitcoin spread and the biggest spread is on the XMO marketplace, and it is just under 1/5%. We will now take a quick look at some of the characteristics of Skycoin. It is an ecosystem that consists of 5 core components. Skycoin is a currency that is backed by bandwidth. Skywire is an anonymous and decentralized mesh internet. Skyminer, a hardware that works as an access point for Skywire internet. Fiber is a decentralized open blockchain network, and SkySuite, which is a suite of decentralized applications. The price of Skycoin hit its all-time high of more than $50 in December of 2017, and currently it trades at just over $1.30. We will now review the performance of various cryptocurrency asset classes as grouped, of course, by the Missouri website. The infrastructure group posted an increase of more than 1%. EOS is one of the top bullish drivers with a gain of 5%. The media and entertainment category is the most bearish asset class today with a drop of 3%. There's, of course, a lot of red across the table here. The financial sector is the only group trading in the green, and there are plenty of gains, but the Binance coin is the one of the bearish drivers here. The currency category is down by 1%. All of the major assets are trading lower. And lastly, the services section stands 0.6% in the red. This is, of course, where the 5 major cryptocurrency categories stand so far this Wednesday. We will now take a look at the most significant moves among the top 100 digital assets, and then we will be back with our crypto experts after this short break, so do not go anywhere.
180 different countries all around the world, which makes us grow in like a sphere.
We are stronger than ever.
Have these questions answered without disclosing anything.
AI field is mostly controlled by a few large corporations.
Much busier, bigger than ever.
In the mid-2020s. I do think that will come.
We should kind of keep in mind that we want the world to be a better place.
$15 billion a day. This is incredible.
People find a way to create infrastructure.
I think knowledge is one of the most important things in the world.
We laid the foundation for the distributed trust model that Satoshi builds on.
It does come with some risks, but at the same time, I think it's an opportunity for countries.
Individuals miss the boat on a market, they miss the boat. When the institutions miss the boat, they bring the boat back.
This is Blocks Live TV.
And we are back with Jason Fernandez, COO and co-founder of AE Token, and John Walsh, City AM contributing writer, Coin Rivet columnist, and blockchain business strategist. Guys, great to have you. How are you doing today?
Great to be here, thanks.
Absolute pleasure. Lots to discuss because Bitcoin has, of course, had a lot of price movement, a lot of action around the 10K level. So we'll come to you first, Jason. Let's start with a short comment on these most recent moves that we have seen on the markets, please.
So I'm not very surprised about how things are going. Right now it's trading in the high 9,000s. And we've seen the Bitcoin has a lot of support at this level historically, and even a bit lower, it's got quite a bit of support in the 9,000s. So I pointed out recently that last month when Libra was announced, Bitcoin was trading in the mid 9200s, 9300s. And subsequent gains could mostly be attributed to essentially the increase in the increase in interest in Bitcoin during the whole Libra hearings and just in general the announcement. So I think, in fact, that was reflected by the fact that Google searches for cryptocurrencies reached their highest level in 3 months on June 18th when Facebook made that announcement. So that excitement has since died down, particularly in the face of regulation and talks of regulation. But Bitcoin still remains higher than it was pre-Libra. So I think that regulation will be closely tied to Bitcoin prices going forward. I think after Donald Trump tweeted out that he wasn't a fan of Bitcoin, and then the Treasury Secretary came out and described it as a national security threat, that's raised concerns that basically the United States may consider banning it. I seen an interview recently where CZ was asked about this, and he said the overall long-term impact would be minimal because no one country could stop Bitcoin. And that's perhaps true, but Bitcoin's highest usage right now is in the US. And it's not just one country contemplating the ban. We know India is also contemplating a serious ban, and it's already banned in China. So those 3 countries are fairly significant, and that's enough to give anybody pause. So I think we should be watching regulation really closely to see how the Bitcoin action sort of mirrors that.
And with regards to India, we will actually touch on that shortly. But I think it's quite interesting remarks you make with regards to Libra. I guess, like you said, the hype surrounding it has, of course, calmed down, but not overly negative there, because, like you said, there is a lot of support around that 9K level. So, John, we will come back to you. What are your thoughts on the markets here?
I think that we're doing this kind of sideways movement between about 9.3 and 10.5, and I think we're going to be stuck in that kind of band for a little while. It might dip slightly below that, might peak slightly over that, and I think we're waiting for the bulls or the bears to win in this fight and see where it goes. Ultimately, I'm bullish on Bitcoin over a long time period. So just looking over the shorter period, I think it's going to be the fight between the bulls and the bears, see where things go. I think that regulation is relevant and important. I think that regulation can both harm and help the price of Bitcoin. I think that if countries start to try and ban usage of it, and we'll come on to that when we talk more about India, I think it actually sends a signal to the citizens there that this is a threat to their currency, and maybe they should be looking at it if their currency is under threat. And I think it's ultimately bullish for the currency.
Okay, but quite interesting. There's quite a similar view, looking at how countries have been reacting towards Bitcoin, and seeing how the markets have been reacting from that. But I guess, like you said, we might be stuck around this mark for some time, so we'll definitely keep an eye on it. So, of course, we've been talking about India, so let's go straight to it, because the Indian government's inter-ministerial committee has submitted its report on the use of virtual currencies in India. It recommends a ban on cryptocurrency. So, Jason, of course, you are located in India. Could you please explain what this report means, and is the blanket ban likely to actually be enforced at all?
So yeah, I think it is likely to be enforced. The ban basically recommends 10 years in prison for anybody who buys, holds, or sells cryptocurrencies in India. And there's already a ban on transferring funds to and from exchanges. So this is just an extension of that existing ban. It just takes it one step further. And also, India has proposed a tax on cash transactions over a certain amount, something like over $2,000, $3,000 in a year. And so the ban on crypto is just a way to make that enforceable and give that policy a little bit more teeth. But ultimately, I think it reflects a poor understanding of distributed ledger technology and essentially the whole concept of cryptocurrency in the first place. Keep in mind that this committee was actually fairly high level. I mean, it was led by Economic Affairs Secretary Subhash Garg, and essentially not only proposed a jail term for buying and selling and trading, but also things like mining. And it effectively suggested elimination of the crypto asset altogether from the entire payment ecosystem. I mean, it makes sense for the government to mandate things like KYC processes for individual investors, and also institute certain investor protections. But the government shouldn't be in the position where they're deciding where one can invest their money or where somebody can. I think banning is obviously a really regressive step. I mean, you could have had appropriate regulatory framework that would ensure customer protection while at the same time being able to foster, innovation. With sufficient protection, consumers could obviously make some informed decisions about investments. But that was not an option that was, that is likely to be provided to people. Another point is that the government wants to eliminate the use of crypto assets altogether in payment systems, but they want to aggressively promote blockchain technology. Which means that they sort of think that they can delink blockchain transactions from crypto. And that shows essentially what I think is a poor understanding of the technology in general, and especially public ledgers more specifically, because you need to have some way to motivate the people that are essentially, when you're looking at public blockchains, motivating those people to essentially go through and process those transactions. The other interesting thing that shows kind of how wrong-headed this policy is that in contrast to the U.S. SEC and the financial, the FATF, it's sort of in contrast to the strategy that those organizations have taken. This panel only looked at virtual currencies as a technology. As a technology specifically. They didn't attempt to classify the underlying purchase of those tokens into financial instruments or classifying them into common categories like currencies, securities, or utilities, which is basically what's done by the SEC. But they're essentially banning the technology as a whole, as opposed to regulating the investment. And that sort of runs afoul of sort of basic financial practices. And you have people like Nouriel Roubini, who seems pretty pleased, and his point is that cryptocurrencies have lost 99% of their value from their peak, most cryptocurrencies, and that's sort of the claim that is echoed by a lot of people that are seeking to ban this. But that's an unfair point because most of these funds are funding startups anyways, and it's not out of line with general startup statistics that a vast majority of them would fail. So by that logic, they would be probably banning AR or VR next. I mean, I think that argument is ludicrous and sort of holds crypto to a higher standard.
We're talking about crypto every single day on our program, and it, for me personally, absolutely blows my mind to think, well, actually, you could get a 10-year penalty and prison sentence. So if you don't mind me asking, Jason, what does that mean for you and your position? Because obviously you are based in India.
Well, I think a lot of people in the blockchain space are going to be looking to move out of India and seek better fortunes abroad.
Okay, well, thank you for giving us your input there. So, John, of course, what are your thoughts on the global influence of the markets and development of the technology if a blanket ban is, of course, imposed in India? And I know we have discussed China, we've discussed a couple of other places, but do you see other countries actually following with similar decisions? And, like we have said in the States, they're calling Bitcoin a national security threat.
Okay, so it was just one man that called it a national security threat, and I think, if I remember right, he compared it to 9/11, which is somewhat ridiculous. Look, I'm pro-regulation. I think that we do need certain levels of regulation. And countries like India, I believe the BitConnect scam was actually originated there, and quite a few of these kind of crypto scams have come out of that country, as well as Bulgaria and Ukraine and a few different places. So I am pro-regulation. I think that there are consumers out there that really need protecting around this space. I think that blanket bans are ridiculous and kind of show up the fear that the governments have. True cryptocurrency, which is truly decentralized and permissionless, you just can't kill. So I think it's somewhat King Canute trying to hold back the waves on that.
And, I think it's a shame that we're seeing all these blanket bans because, you are pro-regulation, and actually a lot of people in this space that we speak to on a daily basis equally are pro-regulation. I guess it's just one of those things that it comes down to, that threat of the unknown. So, Jason, we will come back to you because I want to start to focus on the long-term perspectives of cryptocurrency and the industry. So do you see that in the end there will be many cryptocurrencies, or will Bitcoin actually take over the market due to its decentralized nature and the first, and of course, the first mover advantage?
So I think there'll always be industry-focused coins, right? So there's industry or business-focused coins like utility coins that function within a really specific use case. I think that's going to continue to exist because that's sort of not as easily replaced by general-purpose cryptocurrencies like, Bitcoin or Dash or something like that. There will be some consolidation within those industries. So you will have, for example, some consolidation within the whole money transfer remittances industry. So you might have some consolidation between Stellar, Stellar XLM and XRP, and products that are essentially looking at sort of money transfer and remittances. And then you'll also see some consolidation in other aspects of cryptocurrencies where you'd have sort of maybe 5 or 6 main cryptocurrencies that are for different use cases. So Monero has a reputation for being particularly secure and anonymous. So you'd have various different use cases depending on the particular cryptocurrency itself. But I think as far as even as far as the general purpose cryptocurrencies like Dash and Bitcoin, you'll probably see some consolidation there as well. But I don't think that you're going to see like everything boiling down to just Bitcoin, because Bitcoin isn't the solution to everything. Neither is any one cryptocurrency. What you need is really specific cryptocurrencies for particular use cases.
Okay, so moving forward, you think that we'll see many different cryptocurrencies simply because they all do different things. They work better for different industries. So, John, we'll come back to you. Do you think one coin will rule all, or does it simply come down to different industry-focused coins here?
Well, I get to disagree with Jason on this, which I'm really pleased about. So I'm a Bitcoin maximalist minimalist. So I believe that Bitcoin should have somewhere around about 80%-ish market dominance in the future. Although I see things like Libra also being highly dominant in the market as the medium of exchange. And I think that if Libra comes in as per the white paper and they're able to get regulated and they have all and they execute how I believe they'll be able to execute, I think it will suck value away from all of the altcoins that were trying to do this low-cost transfer very quickly type use case. I do see use cases for things like Monero or Zcash as privacy coins, and I think especially if more and more, if the regulators try and squeeze on the privacy more and more, I think that there will be value being sucked out of other tokens and that are subject to deeper regulation and into things like Zcash and Monero. I don't see a need for 2,000 coins. I think that's ridiculous. I think I'd like to think that in 10, 15 years' time, we'll have no more than about 10, 15 coins that will have very clear use cases that will be dominant in their particular areas. With Bitcoin being the king, with 80% plus market dominance.
Well, I do think that's quite a similar view to Jason. I guess in the end, exactly. We're not expecting to see 2,000 coins, but I think in 10 years' time, we might have a good about 10, all doing different things, with Bitcoin still being king. Now, John, we will stick with you for the minute. We have been talking with our experts on the show about fresh money entering the crypto markets. An entrepreneur and investor, Alistair Milne, has been tracking the number of Coinbase users, and according to him, 5 million users were added over approximately the past 10 months to reach 30 million. What is your take on these numbers?
I think it's really exciting. I think it's fascinating because, well, we have seen a significant increase. The value of Bitcoin has more than trebled since over that kind of period of time. So I think it has had an impact on the market. And I still don't think this bull run has really got going yet. So yeah, I'm really excited. I think that with the Libra announcement, as Jason mentioned earlier, we've seen Bitcoin search for buying Bitcoin have a little bit of a bump. So I'm not really surprised by it, and this is the way that the world is going. So yeah, bring it on.
Okay, excellent. So very, very positive. Jason, of course, we'll come back to you. What are your thoughts on these numbers?
Yeah, it is exciting that there's that many new Coinbase users. I'm curious to see how the other cryptocurrency companies have done. I think there's going to be a shakeup in that whole industry, particularly because some of these exchanges are actually listing what would end up being known as securities. So I'm not sure how that's going to sort of play out, but it'd be interesting to see what the statistics are in terms of growth for other exchanges. But I do believe that there has been an explosion of interest in cryptocurrencies. We know that, just as I pointed out earlier, the Google searches for cryptocurrencies hit essentially their all-time highest level over the last 3 months, basically when Libra was announced. So we do know that that's happened, and there's also been a lot of statistics saying that the total amount of Bitcoin that hasn't moved over the last 5 years has also increased, something like 21%. Which is quite significant if you think about it. So yeah, but one thing to point out though is Matty Greenspan pointed out in June that he looked at basically the past days purchases of Bitcoin, and essentially like the vast majority of the Bitcoin that was purchased came from Tether. So essentially people using Tether to buy Bitcoin. Something like $4.25 billion was purchases made by Tether, and then something like 1.27 billion that came from USD cash, essentially. So that was sort of the breakup for just the particular day that he looked at. And I think that that's telling and something to look at, because particularly with Tether, now we know that Tether is not backed one-to-one. We think it's backed something like, estimates are like something like 83%. It might be backed by fiat, and especially if you're essentially printing Tether, and then you go on and buy Bitcoin with that sort of infects the massive amount of volatility into the market in general. So it'd be interesting to see how much of these purchases recently could be attributed to Tether, for example.
Okay, sure. Now, just finally, Coinbase has shut down their bundle service, and this tool previously allowed users to actually invest in a basket of cryptocurrencies. They already shut down their crypto index fund shortly after launching the bundle project. So, John, we will come back to you. Does this mean that users are not interested in products like these, and what could actually be the reason for this?
So I've not looked at the actual numbers, but based on what I've looked at from the market over the past sort of 6 months or so, we have seen that individual cryptocurrencies, whether it's Ethereum or Litecoin or any of the altcoins, sometimes, although their dollar value may be going up, their price to Bitcoin and price to Sats is dropping. So I think that a bundle like this just simply isn't working, and investors are wanting to, especially because we're still in a fairly nascent market, they're wanting to pick and choose what they actually want. I don't think the market's hit the point yet where you're going to get either lazy investors who just like, give me a bundle, I'll take that, I'm happy with that because I don't really understand this stuff, or having a market where it's mature enough where we really know which coins outside of Bitcoin are really going to be the winners over the long-term period. So I think it's just a matter of market timing, and I wouldn't be surprised if it's a product that they bought back in a year or two.
John, thank you very much for your thoughts today. Jason, just finally, your final thought for us on the program.
Yeah, so crypto is a niche product that people that are going to buy it are either going to know, generally are going to be people that are fairly educated and going to want to choose what particular cryptocurrency, particularly new buyers, want to pick exactly what cryptocurrency that they're investing in. So the concept of sort of investing in a basket may not quite appeal to them. But also, if you look at just its statistics, specifically to that Coinbase bundle. If you look at, if you put like $100 into Coinbase bundle in 2017, a year later, you'd have just over $20. So it was a losing proposition in the first place. But sort of if you're still interested in the whole bundle concept, Gemini Exchange still has a product called CryptoVerse, which is sort of tied to a basket of cryptocurrencies. But I think overall, the reason Coinbase failed or Coinbase shut down that particular product was, I think, because it's just really poor returns, right? I mean, it's a really poor story to say, hey, you put $100 and in 5 years you might get $20 back, or sorry, a year later you might get $20 back. That really is not a great story for most people. So I think that's sort of the main reason it closed down.
Jason, John, as always, it's been an absolute pleasure having both of you on the line with us today. Thank you so much.
Thanks, Leah.
Thanks, Leo.
Absolutely. Now, before we sign off, I do have a last-minute update from our editorial staff regarding the crypto market. The total market capitalization has been hovering over the $260 billion mark during most of the days as markets move sideways. Trading activity has slowed down just slightly, and the coin market cap website's daily traded volume slipped towards the $55 billion level. Bitcoin still trades at just less than $10,000 after dropping during the early trading hours. Well, that is all for this Wednesday's Crypto Now live show. We thank John Walsh and Jason Fernandez for their expert analysis. We thank the audience for joining us and invite you all to accompany us every weekday at the same time.